When it comes to Forex trading, few things shape the landscape more than central bank policies. They influence everything from inflation to interest rates, and if you're not keeping an eye on them, you're essentially flying blind. Today on FX Limit, we're diving into the top 5 central bank policies and how they impact the Forex market, and how smart traders use tools like the Apex Trend Indicator to stay ahead of these big moves without the guesswork. Let's start with interest rate decisions. This one's a heavyweight. When a central bank changes its interest rate, it has a direct effect on that country's currency. A rate hike usually strengthens the currency because it attracts more foreign capital. Lower the rate, and that currency often drops. It's not just about the number, it's the message behind the move. Was it expected? Was it a surprise? Traders who catch those shifts early often ride the wave before the rest of the market catches on. That's where something like the Apex Trend Indicator comes in handy. It doesn't just show you what happened, it shows you what's happening now in real time, on any pair or time frame. Next, quantitative easing or QE. This is when central banks inject money into the economy to boost spending and investment. Great for economic growth, but it usually devalues the currency. Think of QE as turning on the money printer. More supply, less value. When QE is announced, traders tend to sell that currency off. The key is spotting the shift before it's fully priced in. If your indicator is showing a strong trend forming after a central bank meeting, that's often the confirmation you need. And with non-repainting signals and built-in success rates, the Apex Trend Indicator gives you confidence to take action, not second guess. Third on the list is forward guidance. This one is a bit subtle, but incredibly powerful. It's not what the central bank does, it's what it says it plans to do. Markets are forward-looking. So if a central bank hints at future rate hikes or cuts, traders react instantly. You might see massive price action just from a single statement. But here's the catch: markets overreact. They whip back and forth based on interpretation. That's why trend confirmation is critical. The Apex Trend Indicator scans multiple time frames and pairs to confirm the trend direction, helping you filter out noise and focus on genuine momentum. Fourth, currency intervention. Some central banks actively buy or sell their currency to influence its value. It's rare, but when it happens, it's dramatic. These interventions are usually unannounced, creating sudden spikes or drops. If you're not prepared, you can get caught on the wrong side. But if you're monitoring signals across time frames, like with the Apex Trend Indicator's dashboard, you can often spot unusual strength or weakness before the market reacts. That's the kind of edge that separates reactive traders from proactive ones. Finally, inflation targeting. Most central banks aim for a specific inflation rate, often around 2%. When inflation runs too hot, banks raise rates. When it cools off, they cut. Forex traders need to stay in tune with inflation data and how central banks respond. But again, it's not always about the data, it's about the trend the market forms afterward. A spike in CPI might not mean much if the trend doesn't hold. That's why many traders rely on visual cues, like the blue and orange trend lines from the Apex system, to confirm whether to stay in the trade or get out. So there you have it, the 5 major central bank policies that every Forex trader needs to watch. Interest rates, quantitative easing, forward guidance, intervention, and inflation targeting. Each of them sends ripples through the market. But trying to trade based on fundamentals alone can be overwhelming. That's why tools like the Apex Trend Indicator from FX Limit exist. It doesn't just alert you to trends, it confirms them with real-time data, success rates, and built-in trade setups, so you can act with confidence, not guesswork. Whether you're scalping the M15 or swing trading the H4, understanding central bank policy is vital, but reacting to it properly. That's where the real money is made, and with the right tools in your corner, you won't just follow the trend, you'll lead it. Thanks for watching FX Limit. If you want to see how the Apex Trend Indicator can level up your strategy, check out fexlimit.com. See you in the next video.